Ladies and gentlemen, good day and welcome to the Q4 and FY22 results conference call of AVRO India Limited, hosted by Kirin Advisors. As a reminder, all participant lines will be in listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. I now hand the conference over to Mr. Vasupal Shah from Kirin Advisors. Thank you, and over to you, sir.
Thank you. Good morning, everyone. I would like to welcome Mr. Sushil Kumar Agarwal, Chairman of AVRO India Limited, Mr. Sahil Agarwal, Managing Director of AVRO India Limited. So this is the first conference call handled by the company. So the flow of the call will be, first of all, Mr. Sushil Kumar Agarwal give brief idea about the AVRO India Limited, then the quarterly and yearly performance of the company, and then we will be having Q&A session. Sushilji, over to you, sir.
Thank you very much, and very good morning to all of you, ladies and gentlemen. It's a pleasure connecting and talking to you and addressing for the first time, and I believe and I'm sure you're going to go a long way. Thank you very much for being with us. So I'll just start. I believe that all of you are in the best of your health and spirits. I welcome you to the first result conference call of AVRO India Limited. AVRO India Limited is the largest manufacturer of plastic molded furniture in North India and amongst the top 5 brands in the country. Having a base at Ghaziabad, the company manufactures household and office-wear plastic molded furniture, tables, stools, and almirahs. The company has served more than 5 crore families since its inception. The products of the company are mainly known for their quality and durability, along with the long-term warranty services. This has propelled the growth of its two established brands, AVRO, AVRO, and another brand, A1, AVON. AVRO has one of the largest product ranges and manufactured with imported machines and molds in highly automatic environment and following global quality standards and services. The operational efficiency enabled the company to stand strong against its competitors, as its products are almost 40% cheaper than its leading competitors, owing to certain amount of volumes. We are quite confident about the quality of furniture we offer, and therefore I can proudly say that your company is offering a warranty as high as 3 years on a select product range, which is for the first time in the country that somebody is offering. The company understands these key areas and remains focused on all these for many years. The company has strong growth plans, which included backward integration, quality assurance, and new product launches, along with the capacity expansion. During the year, one good thing that we have done is we have commissioned our recycling processing facility and are using recycled plastic granules as our raw metal for some of our products, which are post-industrial, which are absolutely in pink of the health. This has helped us minimize our raw metal costs and also help the environment. On the distribution front, the company has a strong online and offline presence. The company has a strong presence in North India with more than 20,000 retail touchpoints. Through online portals like Amazon, Flipkart, IndiaMart, and others, the company is selling its products through Pan-India. FY22 was a landmark year for us, as we have achieved a revenue of 65.20 crores and PAT of 2.99 crore, which is a big milestone for us. Now let me give you a quick industry insight. The plastic furniture industry has been witnessing healthy growth, with the commercial sector accounting for more than 1/3 share of the market revenues. However, with the increasing growth of the construction industry worldwide, especially in developing countries, the demand for plastic furniture is expected to surge significantly in the residential sector. The increasing discretionary spending and government incentives boosting developments in the residential construction projects are generating high sales potential for plastic furniture in the residential sector. Leading manufacturers in the plastic market are shifting their focus on residential buyers to unlock profitable growth opportunities in the coming future. Increasing demand for low-cost, lightweight, and durable plastic furniture in various end-use sectors is driving end users to adopt plastic furniture instead of traditional wooden or metal furniture. Ongoing developments in engineering plastic and growing focus on recyclable plastic will remain instrumental in shaping the future of plastic furniture market. The market gained momentum with development of high performance plastic materials suitable for manufacturing durable plastic furniture. Manufacturers will continue to launch innovative materials and designs of plastic furniture to capitalize on lucrative sales opportunities. Small businesses are entering the plastic furniture market with an environment conscience by launching new designs of plastic furniture made of recycled plastic. In order to capitalize on the growing consumer demand for eco-friendly products, the Asia Pacific is expected to grow at a significant rate in the global plastic furniture market due to rising disposable income and increasing awareness among the general population regarding its plastic furniture. India and China are the most dominated countries in the region. The market in Africa is expected to grow at a good rate in plastic furniture industry. The Middle East and Africa market gained the attraction of the investment for the companies for more scope in the region and expected to rise healthy growth over the forecast period. We stand out in this growing business segment with our strengths, and which are: number 1, 2 decades of strong experience; number 2, strong established brands like A1 and AVRO; number 3, 200 plus SKU range that we have, one of the best range; number 4, unique, robust and registered design. We have more than 28 design registration with us; strong online and offline presence. We are with the touch point, as I said, plus we are also online and serving more than 20,000 pin codes across country; strong sales distribution system that we have; and quality product at 40% cheaper cost. So it's got all the making of a great company. I'm also happy to announce that your company has moved to the main board of NSE and BSE. AVRO India Limited made its debut in the secondary market by listing its share in July 2008 on NSE Emerge platform, and within 4 years, the company has migrated to the main board of BSE and NSE on 7th April 2022. This is a very positive development for the company and its investors, as it has added liquidity to the stock, and from April 22, migration will help the company to take its journey to the next level. Now let me quickly take you to the financial performance of the company for FY22. Fourth quarter FY22, revenues were reported 31% year-on-year growth to 18.63 crores. EBITDA came at 2.998 crores, up by 322% year-on-year growth. EBITDA, a margin improved from 5% to 16%, significant. Net profit was 1.85 crores against a profit of 12 lakh rupees. Net profit margin was 9.93 as against less than 1% in the corresponding period. For FY22, your company has reported. Total revenues of the company is 65.20 crores, registering a growth of 22% year-on-year. EBITDA grew 37% on year-on-year to 5.63 crores. EBITDA margin improved by 96 basis points to 8.63%. Net profit was higher, 73% to 2.99 crores, and net profit margin improved 144 basis points to 4.60%. Debt to equity was all-time low of 0.37 times, and return on capital employed FY22 was 14.35% and 15.3%. So, ladies and gentlemen and friends, now I open the floor to you for question answer, and I'm all yours. Please go ahead. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Apurva Raj from PR Capital. Please go ahead. Mr. Apurva Raj, your line has been unmuted. Please go ahead with your question.
Good morning, sir.
Good morning. Good morning, Apurva. Good morning.
Sir, what are your recycling plans?
What we are doing, Apurva, is that let's say, lots of these industries. For example, Reliance is sending all the metal packed in polypropylene bags. And these bags, invariably, we discard them to kabadis. But what we realized was that these bags are absolutely made of the pure, 100% virgin polypropylene material mixed with the right kind of ingredient that we desire and wanted to use for our own products. And very lately we realized and recognized that why don't we recycle that same product itself and consume that into our manufacturing. So that has actually helped us a lot. Now we're in the process of actually scaling up that, not only the consumption or let us the input that we get from the various sources of these bags, because every granule comes in 25 kilo bags. But we would also be able to source it from other sources and other companies who are actually having such kind of bags and they discard it to kabadi. Instead of discarding to kabadi, those bags can be utilized and taken by us and recycled beautifully well and can be used in the product, maybe about 25 to 30% kind of range.
Okay. And when you say that they are selling to kabadi, so they must be selling at a very negligible price. But are you paying any significant price to them, which is create a difference between selling to kabadi and selling to you?
Yeah, Apurva, what happens, this starts from as low as about 20 to 25 rupees kilos to going up to 50 rupees kilo, depending upon how the material has been kept. So what we prefer to do is we prefer to buy material which is absolutely in the great shape, which can be used by us without compromising on the quality front of our product, and without even actually losing too much on the price priority for that matter.
Mm-hmm. And after this recycling, how it's going to impact your RM cost?
Certainly, what happens today, let's say Reliance price of polypropylene is as high as about 120 rupees kilo. Mm-hmm. And vis-a-vis that, in case if we are getting something for about 50 rupees kilo, I'm sure there's a huge drop in the raw material input costs. And even if we were to do for 30-40% or so, it doesn't hamper the quality, but will bring down certainly our raw material input cost and thus, increasing our bottom line.
So, it means we are targeting almost 25 to 40% of total raw material consumption from this source, is it?
Absolutely.
And this can make a real impact in your RM cost, and that leads to the absolute bottom line improvement.
True. Very rightly said, Apurva. And believe me, this is something probably I sometimes feel we could have done it earlier, but it is a need-based, because raw material prices, commodity prices have shot up for almost all sectors for that matter in the last 1.5 years or so, and they shot to the roof. So I think it's a high time, quality time for all of us to really look inward and probably take care of this, and we took the cognizance of that. So that is how, we started with this.
Okay. And what's your working capital cycle?
Working capital cycle, I think, debtors, we get it in almost about 60 days average.
And receivables on a little higher side?
Receivables on the higher side at this point of time. If you see year on year, last year they were less than 50% of what it is today, just because during COVID, when people needed support and help, in spite of the fact that we lost 2 months of our operations in April and May of 22, but we supported our distributors to the best of their ability and all that, and that is now getting repaid to us in terms of the loyalty as well as offtake increment, etc. And that I'm sure is absolutely in the process of a great recovery. So this year, FY23, when we close, we assume and believe that the debtors would be very much lower than what it is today.
So basically, this is a very short-term impact, and by doing that, you are getting the distributors' loyalty also, which can really help you in growing future, right?
Perfect. Beautifully said. Absolutely, I totally agree with you. And because we've been having a relationship for more than 20 years in the industry for that matter. I'm also National President of Furniture Manufacturers Association, and I'm also Chairman of CII Western UP Zone. So when I connect with these people, the amount of affinity that I have, they all believe in the story. They believe that, yes, we are here as a company, as a corporate, to help them and support them and guide them through these tough times that they have all faced. And, God has been very kind that not only a company did a better job than earlier years in spite of COVID, but, distributors are more than happy and willing and forward coming today to take it to the next level next year.
Okay. Sir, as we discussed, you said that 25 to 40% you are trying to source from the Reliance, the back material.
Right.
Do you think that other companies also trying to get this source?
What happens, Apurva, this is very interesting. Incidentally, not all sector can actually, for example, let's say somebody making muggas and baltis and dabbas and all that. They can't because there's another one. First of all, it's a HJP product. It's not a PP. And they cannot utilize these kind of products because that requires a very different MFI, which is melt flow index. But in our case, because
I'm talking about apple to apple. I'm talking about, let's say, Nilkamal, which is into same sector, or any other company which is into same sector are also looking.
All right. Incidentally, for let's say company like Nilkamal, Supreme, and Cello, because their top line or the pricing itself is very, very high, and they are able to take because being generic brand, because very famous brand, so they command their premium and prices. Because since we are little new relatively in terms of the branding, etc., or in terms of reach out, so now we are taking to the next level in terms of not only branding and taking care of how to actually get the best of the prices for that matter. And also in the meantime, while we increase, let's say, our top line, we also increase our prices, but we also decrease our raw material input costs so that we can sustainable and we can become very profitable.
And for this recycling and all, do you get any benefits other than monetary, like any green benefits?
In fact, that's pretty interesting, Apurva. You said this. I really want to tell you that I was given to understand from the experts in the industry that due to EPR, which is Extended Producer Responsibility, now these companies are forced to buy back 100% of their plastic consumption that they do in the 3 years or so. So because we are using this recycled metal, we should be able to actually get the EPR credits, which we are scouting for. We haven't frozen anything as yet. We are looking forward to. Plus, beside that, there is a recycling carbon credits also likely to happen. So we're in the process and discussing with the experts of the industry and trying to understand what is it that we can monetize, how is it that we can take care of that and leverage, and probably also become a sustainable and let's say environment-friendly company.
Okay. That's all from my side. Thank you. All the best.
Thank you, Apurva. Thank you for being with us.
Thank you. The next question is from the line of Nilesh Karani from Magnum Equity Broking Limited. Please go ahead.
Hello, sir. I'm audible?
Good morning, Nilesh. I'm absolutely audible, sir. Go ahead, sir.
Good morning. And, sir, very good set of numbers. Very impressive numbers. Sir, just to ask, sir, how do we see, any expansion further or any capex related further you want to increase your production, or how is the consumption and your capacity utilization right now? Can you just give me a brief about that, please?
Yeah. Incidentally, we are absolutely using our entire capacity for that matter. We are, in fact, outsourcing certain capacity from our other plants. So now, in any case, the expansion is certainly on the cards. What is happening is, number one, the same product category that we are into, we're trying to add on more SKUs, which serves all section and demographically, geographically, all section of people who can buy, right from, let's say, 200 rupees to 1,000 rupees plus product. So we are trying to serve everything. Wherever there are deficits and gaps, we are trying to cover that. That's first and foremost because that is our core competence, and that's our expertise lies in understanding that. Besides, now what is happening is, for example, let's say plastic almirah, drawers, chests, cupboards, all kinds of things that are now being taken over by plastic industry are beautiful new things that have come up to us. So we are also scouting and looking for that in terms of expansion. So I believe that, not only this product vertical that we're talking about in the same segment, but we are also looking at various other products like, revolving chairs, mattresses, etc., to be added because the same distribution channel that we have at this point of time are the kind of people who are actually selling even these material also. So we can piggyback on our existing infrastructure by just adding these products. Probably we will either manufacture it or even outsource in the initial stage in our own brand name and then later start manufacturing. So as much as, we get the internal approvals or debt access or whatever that, we can leverage, we will certainly leverage each and every penny to ensure that, we try to add on as many products as possible. So while we are doing that, not only online and offline, in case if you have to go on Flipkart and Amazon today and even type plastic chairs, or for that matter, or go to any level, you will find AVRO being on the top as a list. So not only in terms of the ranking or the rating that we have, it's absolutely humongous. So, and even otherwise, as I said, 10 states plus that we are operating. Now we're expanding a footprint across country into various sectors, not only from online selling, but offline selling also. So we believe and assume that as we go along, we will certainly be able to add a lot of product verticals. And not only this, but different product verticals, we are still not actually, we have thought about it. I'm not in a position to right now reveal that, but I can tell you that over a period of time, we have a huge plans where there's an entry barrier and there's a certain amount of great bottom line growth also in that. We are also scouting and looking for that. And as much as the capital availability will be there, we will ensure that all those dreams are realized.
Yeah. So just to add, like, see, right now our plant is at Ghaziabad, correct?
Yes.
So basically, your transportation costs or your logistic costs to the parts of country would differ from the other players, or how it is like?
That's true. You're absolutely right. For example, let's say large corporates, companies like Mailcom or Supreme, they already have base and spread across entire country in terms of the plants, whereas we are North India based. So that's how what we do is we assume that up to 10% freight. For example, Mumbai, we can send in 10%. Surat, Ahmedabad, Rajkot, everywhere we send 10%. Hyderabad, 10%. So in 10%, wherever we can access up to 10%, freight is absolutely fantastic. Maybe deep down South India in terms of Kerala or Bangalore, etc., it could be 12 to 13% or 15%. There it becomes a big disadvantage for us to actually sell because, freight cannot be mitigated. So that's how there is a need that has arisen that probably we should have a base in South India also, not only in terms of the offline sales that we're looking at, but also the online distribution that, we're doing at this point of time. This is a need. And as we go along, we will certainly try to explore, depending upon the capital availability, that we should be able to set up a second plant also in the times to come.
Thank you, sir. Thank you. That's all from my side. Thank you so much.
Thank you, Nilesh. Thank you very much.
Thank you very much. A reminder to participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Supriya Katkar, individual investor. Please go ahead.
Hello, sir.
Hi,
this
good
is
morning,
Supriya.
Supriya.
Yeah. I just wanted to understand that Q3 has been little better than the Q4. So what has gone wrong as far as the revenue is concerned in Q4?
No, in fact, I would put it this way that Q4 has been much better than Q3 for that matter. Q3, our profits was little lower, and I think company did not really get that kind of result, but Q4 has been better. In terms of bottom line growth, that I can certainly look at, and I think Q3, I have Q4 data I have, Q3 right now it's not in front of me, I can certainly check that. But
no, on the top line front, we are a little lower.
Supriya, in case, for example, what happens, normally Q3 and Q4 are very good time for businesses because, festive season starts, Diwali is there and all that, except there's a small dip in the December that happens invariably. But January, February, March, Q4 is always the best in any case. So is Q3. So I can certainly check that figure and revert back to you and offline also. But as much as I have, we have reported then 31% revenue growth in year on year on Q4. Okay, so I can certainly check Q3 also, and I'll come back to you on this, please.
Yes, sir. On the revenue front.
Right. I got it. Top line.
I also wanted to understand, like for EBITDA margin was 16% for Q4. If you see for year, it is 8%.
Right.
So I just wanted to understand, with the recycling unit coming into operation, is company able to maintain 16%, or what outlook you would like to give on EBITDA margin front?
Supriya, I totally agree with you. What you said makes big sense because Q4, because of recycling, that did add a lot of benefits in terms of company's growth, and I can continue to assure you that over a period of time we will leverage it as much as possible. So we are not only confident, we are absolutely sure of moving forward with a certain amount of growth in the bottom line. That will be anyway there. So over a period of time, I'm sure in the next 2, 3 quarters, 4 quarters, I believe FY23 should be a better than stellar year for us. So you will continue to roll with that.
Okay. And so, as we are looking to expand product portfolio, is any acquisition on the card, as I believe there are many unorganized players in the segment?
Supriya, you asked question. One is the unorganized player. Then you asked another first question. I mean, I just missed something in that.
Yeah, I just wanted to understand, as we are focusing on increasing portfolio, so along with increasing the SEO, as you mentioned in your earlier comment, are we also looking to acquire any company from the unorganized sector, as I believe there are many players in the unorganized sector?
Wonderful. Supriya, incidentally, our country is so large and so dense that there's no dearth of manufacturing or sales for that matter. These unorganized companies, what happens is they normally sell, very poor quality of product, and within a very small region, they're all region specific, let's say 100, 200 kilometer periphery that they operate in. But whereas we are operating pan-India in any way, and the offline distribution model, we are operating up to 1,500 kilometers. So I believe that we don't really see any threat from this unorganized player. They will remain wherever they are, but they will not be able to grow, and they will probably be over a pattern will either fizzle out or they will get converted, will change, whatever the case may be. And because today, like for example, large corporates, I'm sure the same space, Nilkama, Supreme, Seller, etc., are doing fantastic job, and you can see the bottom line, top line, etc., that they have sectoral also or product vertical category area also. So we also believe that since we have an expansion plan and we are going ahead not only with SKU but a strong offline distribution model, on being an online present also is giving great amount of recall to the consumers and dealer distributor who want to get appointed with us. So that is giving us a great leverage. So we don't see any threat from the unorganized player. In fact, today the way we are rising forward very fast and very smart, I believe that we should probably be in the league where we would be company would be looked upon as the company to be sort of aimed for. We are getting prepared for that, Supriya.
Yes, sir. Thank you. My question is not about the threat. Absolutely, we are among the 5 top players. So we do not face any threat from the unorganized player. My question was whether you are planning to acquire any company from the unorganized player.
I'm extremely sorry, Supriya. I somehow probably missed that word acquire. All right. Okay. Supriya, we thought about it. What happens? We are a company which has got a very different standard altogether. We have Fermatic Milacron machine, which is an American company, 100% owned subsidiary in Ahmedabad. We have been buying machines only from the global largest player, best of the, because I believe CapEx has to do with the best product. So today, all our machines are either from that company, and 1 or 2 machines we have from Haitian, which is the world's largest manufacturer of machines, China-based company, 30,000 machines they manufacture. When it comes to molds, we buy the best of the molds, which are sent to European market. So what happens, Supriya? The moment we try to acquire this unorganized player, we don't see value driven in them because the infrastructure is so shabby and poor that it doesn't gel into our philosophy and the culture that we operate in. Because we believe in Six Sigma, Kaizens and 5S and lean management, etc. But probably they don't understand, and the way unorganized sector that they are into, very small, they'll probably be working in a very small area or in a very unorganized way. So, and their machines upkeep will be very poor, or the molds that they have are not of the standard and quality of the design that we're looking forward to. So, we somehow don't understand. For example, you're picking an Apple phone. You feel, all right, Apple is a great finish and all the things. But in the same way, same league, if you were to pick on some Thai or Malaysian phone or some cheaper phone or something like that, probably you will not feel great about it. So, the same philosophy goes with us. And because we understand the product category, machines, etc. so well, whenever we have to do, we'll certainly go, I will say brownfield or greenfield, but not an acquisition. We're not looking at acquisition at this point.
Okay, sir. If I may ask one more question, sure. What is your planned revenue 3 years down the line?
Well, Supriya, I don't think that I will be able to really give a great guidance on this, but I can assure you and say one thing, that because the buoyancy in the market is very, very good, product acceptability is great, and we are also getting into branding, etc. So I believe that over a period of time, not only the 15% organic growth that we are actually getting from the market, but we will cannibalize on other companies' brands also and other companies' market share. So that being the case, and because we have a great leadership team here working in the company, me, my 2 sons, and my daughter-in-law, 4 of us are operating from this space. So I believe that we have a making of a great company and great exponential growth that we're looking at. So I can only say that over a period of time, with all the blessings that you people are giving us and guidance that you will continue to give us, I can assure you the company will touch different heights which it has never ever seen in the past history.
Thank you very much, sir. Congratulations for good set of numbers and coming to the main board. I wish you all the best for your future growth. Thank you.
Thank you, Supriya. Your blessings means a lot to us. Thank you very much.
Thank you very much. The next question is from the line of Kuber Chauhan from IDBI Capital Markets. Please go ahead.
Yeah, congratulations on good set of numbers, sir. Am I audible?
Yeah, you are audible, Abhay.
Yeah, a couple of questions though. Just wanted to know your revenue contribution from different segments. Number one. Number two is from your mix from online and offline. Number three is what are the edge we are getting from the number one partner, which is Nilkamal. And number four is are we planning any debt further?
Sorry, I missed you this. Please, Abhay, can you please repeat this again? Offline you said, edge with Nilkamal you said?
Debt, any long-term debt. Are we planning in future? Yeah.
Okay. I'll start with wherever I listened to. You said about the offline and online revenue model. I think, at this point of time, we have close to about 6% plus online revenue, which we believe we should be able to take it to the next level. We're looking at almost more than 15 to 20% online because we're expanding and increasing our presence there. Rest is all offline through the distribution model that we have. And in terms of coming to the edge of the Nilkamal, I think you had asked another question before that. I somehow missed out that also.
Segmental breakup. I just wanted to know the segmental breakup.
I got it. Segment breakup. Now, segment when it comes to, because we're in the category where there's a huge range of plastic furniture, right from stool, patla, table, chairs, etc., more than 100 and odd SKU that we have, plus the colors that we have, the designs that we have. So combined put together is the revenue that we have posted at this point of time. In that, we have also had a small contribution coming from Steel Almira, which is about, I think, 75 lakh rupees or so, not much. But this year, we will take it to the next level, I believe. And we are still to expand on certain other product verticals that we have been talking about, not only in terms of revolving chair that we're looking at, a couple of other things. So we haven't started that. So this year, when it comes to, I think next FY23, I should be able to give a great breakup of all the segment revenue coming from all these segments from that. And when it comes to edge on the Nilkamal, I would say Nilkamal is a generic brand. And of course, very famous and very popular, also a great company to work with. And the great company's products also. But the edge that we have is the personal connect that we do, CS guarantee that we offer, and a certain amount of, let's say, road shows, etc., that we do at a distributor's point. The amount of, let's say, different kind of paradigm shift that we have from whatever that these large corporates have been operating, we're trying to do that. And while we're going to do that, the acceptability amongst the distribution fraternity in the general trade is pretty good with us, with other companies. And that's how we are trying to increase our top line, and we're trying to acquire not only that organic growth, but inorganic in terms of the cannibalization of brands also. So I think, we are having a certain amount of edge in terms of that, though Nilkamal is a very old company, but we are also 2-decade-old company, and we have established ourselves as a product leader because we have more than 28 designs which are registered in the company's name. And I don't know, I'm not very sure whether any company in the country can boast and have so many designs registered in their own. This is a great achievement that we have done. And as I said, 40% cheaper than Nilkamal, and not with a compromise on quality. In case if you have to go online on Flipkart and Amazon and check the ranking and rating, etc., or the number of stars that they have been given to a product, you will find it fascinating that this company is able to give great results at a fantastic price and still able to sustain and grow. So that's the kind of strategy we adopt here. When it comes to debt, I would say, Abhay, that, we are actually not looking at too much of debt because our debt at this point is reasonably low. I believe it's less than 2 crore, 1.75 crores or so. And we will continue to ensure that we leverage debt as and when required for capex needs that we might come up with, which we are certainly looking at. And we will keep debt as low as possible, serviceable debt as low as possible. And we believe that internal accrual is something that we should be able to take it forward. And that should bolster our balance sheet and also give us that leverage of, getting into the expansion mode.
Okay, understood. If I may ask you one more question, sir. Are we catering only to domestic market or are we doing exports as well?
Abhay, incidentally, what happened? We were so much flush and we were so much contented that we never ever explored export market. Progressively, we started realizing there's a huge export market in the neighboring country like Malaysia. For example, we exported some metal to Mauritius a couple of days back through Mumbai. We realized that Mauritius or Nepal, Sri Lanka, Bangladesh, and so on, so a lot of countries do not have a lot of manufacturing ability that we do have. And we are a company which has got a product category which are very different than anybody else. In fact, we are the only company, certain products that we have, nobody else has in the country. So we never leveraged that. We never thought about it. But it's high time now. We are now setting up an infrastructure where we will also be tapping all sorts of exports. And over a period of time, I believe FY23 should see that there is some amount of revenue coming from exports also.
Understood. Okay, sir. That's it from my side, and all the best for all your future plans.
Thank you, Bayat. Thank you very much.
Thank you very much. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Thank you very much, sir, for the opportunity. So I just wanted to understand, firstly, like quarter on quarter, we have seen about 7.5% EBITDA margin improvement, right, from 7% to close to 15%. So how much percentage of that is driven by this recycling thing that we're talking about?
Your full name is, last name I got as Podar, first name is?
Deepak.
Deepak, all right. Deepak ji, because we started this recycling only in the last quarter, FY22, fourth quarter. So that's how it did not show up in the other balance sheet or other quarters. But, I believe that now since we started this, not only we are sustaining, but we are also growing with it. And we are expanding, as I was mentioning in earlier statement, that we are actually taking it to 40 to 50% of level of our entire consumption for that matter. So that should certainly help us a lot. So you will start seeing certain amount of benefit that you saw in the quarter 4, same way in all the quarters in the times to come.
Okay, so a partial benefit we saw in the fourth quarter, right, because of the recycling unit. So and now our even gross margin moved up from 25 to 30% this quarter and quarter.
Right.
So ideally, what you're saying is that this 14.5% our EBITDA margin can move up further because we'll get the full benefit of this recycling unit in the coming quarters?
We are optimistic and positive about it.
Okay, and so what would be the potential of that 15%? Like once we utilize that 40 to 50%, how much bump up can this give to your EBITDA margin? Can it become like 18-20% kind of a margin?
Deepak ji, I would be very happy, but it will be very difficult for me to give this kind of guidance or direction or forecast. But I can assure you, it will certainly add up to volumes. It will certainly add up to the, let's say the cash flow as well as, the kind of bottom line that we're looking at. It will certainly add up.
Okay.
And not only we are very confident, we have actually done entire work, we are already working on it. So it's not on a trial basis, but it's already been executed. Or it's the process is on.
Okay. Yeah. That's it from my side. Thank you very much.
Thank you, Deepak ji. Thank you very much.
Thank you very much. Participants, if you wish to ask any questions, please enter star and 1. As there are no further questions, I now hand the conference over to Mr. Vastupal Shah for closing comments.
Thank you everyone for joining the conference call of AVRO India Limited. If you have any queries, you can write us at vastupal@kirinadvisors.com. And once again, thank you to the management team and the participants for joining the call. Thank you.
I'm extremely grateful to Apurva, Nilesh, Supriya, Abhay, Deepak, everybody, all of you who asked questions. Please continue to guide us, get connected with us, send us mail, WhatsApp, whatever you like. In case if you have some kind of a guidance, direction you want to give it to us, we'll be more than happy and willing to take it because we need it at this point of time. So please bless us, please guide us. Thank you very much. Have a nice day and have a great day. Thank you.
Thank you very much. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.